Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the Dow Jones here on a daily chart, and what we want to point out here is that we're in a wave 4 here at the moment, and that means that this move down here would be an A wave, a B wave, and we're looking for a C wave to move down a bit lower, below the 13,500 before we see another move to the upside. So just drilling in on that point there, this is how this correction is panning out so far. So what we have here from the previous high point here is the move down through here for the A wave, the A, the B, and the C wave for the B wave here. And now we're looking for wave C to come down in wave 4 here. Once that's complete, we'll see further upside. I've just outlined this particular correction here in very simplistic terms, in terms of an A and a B and a C wave here. However, it could also be a triangle pattern unfolding through here as well. The way that I've got it so far through here is just a normal zigzag or a flat correction through here, but it could pan out as a bit more complicated. And what I mean by more complicated is that this move down through here would just be one swing, 2 here, 3 here, then 4, and then 5 here. So basically 5 waves swing across the 13,500. That's a possibility, so just prepare for that. But in the meantime, we'll just look at this as a wave C coming down through here, and wave C's are in 5 waves, so we will look at this starting with down for 1, back for 2, and then down for 3, 4, and 5 moving down through here. There is lots of support sort of in this area through here, so we'll see what sort of extension we get in the third wave through here. In terms of trading down through here, you'd be using just going into the 10-minute chart through here. I've retested 13,600 through here, so you'd use the 13,572 as the retested resistance through there, and looking to add to any short positions there. And the basis for that would be sort of twofold here. Last few days we've been talking about this particular price action moving down through here, and we had this 1, 2, 3 down here. We're looking for the 4th wave to come back, and then we're looking for a move lower through here, which would give us our 5 wave structure to the downside. Of course, it's got after hours trading in through this, so it can be a little bit sort of complicated there, but there is a reasonable 5 wave structure to the downside, an impulse wave, and then pulling back up the 61.8% for the wave 2 or the B wave there, coming in at 50% is fine. There's also, the 6 for the traders that know the number 65 there. It really sort of pinned it there, but there's also sort of strong volume coming in from that as well in that area there. Just going on to the daily chart here. See that there, so you can see that strong selling volume coming in through here. I'm not sure if that was some sort of triple witching with volume coming, options volume coming out or not, but certainly has pegged it there, and we haven't really seen this market being able to get back above that 1365 there, which is actually, the 65 is halfway between the 5 and the 8 there. So basically we're going to be seeing weakness in the market. So that means that we've, on the Australian market, we've tightened up our, all the stops are looking sort of quite tight now. So we should be able to sort of expect some softer moves in there, and just sort of cutting into that a little bit. Well, first of all, we could have a look at the S&P 500 as well. Just bear with me a second here. Just find my little chart, just getting organised after coming back from Melbourne. Okay, so that's still not the S&P 500, this one here. So so we're looking the same here as well. There's good support here. When I mentioned the triangle pattern, that's also possible as well, but in terms of a bit more of a 3-wave move down to this area through here, and then a move up here as such, a bit more of an awkward triangle actually. So we'll see how that pans out through here like this, but we'll be looking at some type of corrective pattern before we see a move up. So we will be seeing supports tested. The Australian market is a little bit different than the US markets. It's doing its own thing. Our target to the upside was the 4,500, and 500 being, quite a strong number. Then we're obviously going to see some sort of corrective pattern there. How large will the corrective pattern be? Well, we'd have to expect a series of swings. So normally, looking at the 2-hour chart through here, normally would see the arrival and then a reaction from that number, and then looking for support. Now, the first level of support would be subgroup 2 within here as well. However, if that fails from that point, then we need to look at the midpoint here at the 44.50. And for that to occur for day traders, you would want the subgroup 2 here to be obviously resistance, and the important number in that would be the 44.72 there. But let's just imagine for a moment, we're still in an uptrend here, so we're a bit stronger than the US markets. So the normal sort of pattern that we would see across here, let's just say that this support in here at the moment holds in here. So we would see the arrival, the reaction either from here or down from here somewhere. We would see a move back up through here that would probably be held within subgroup 1, and that's its job there, the 10, 20 and 30, to hold that price there. And then we would see the subgroup 2 here holding the price to the closest largest number through there. So we would see a series of moves through here, and then the swings would get a little bit larger from that there. But the move up from here, we could quite easily count 5 waves up through here, initially for wave 1 here, and then wave 2 here. Now, what I'm not quite sure about is that, do we have wave 3 here and wave 4 across into here and wave 5 up to here to make that, or do we have an extension through here, and this wave 3 not only will be here but would actually be up here further on top here? So a little bit unsure of that, but the main aim was to trade from above the 43.72 here up to the 45, and basically get out and wait for the correction here. Once we've got the correction, then that would be the foundation for the next trend up there. So you can't really expect the market to have any particular strong trends in this area through here as such. So just be a little bit careful in that point there. Alrighty, let's have a look at commodities. Okay, looking at copper here for the base metals. Of course, the US dollar index is going to play a strong role in all of this, and we'll look at that next in the FX section there. But as far as it goes so far with copper, and gold's pretty much the same sort of daily pattern as we've got here as well. And we're looking for an ABC correction in terms of for wave 4 here, in terms of the A wave to here, the B wave and the C wave. And the C waves are always in 5 waves, so we're looking for 5 waves to come down through here. The 38.2 retracement level is the 367, so we'll see how we go with that, but we can pretty much expect the 365 to be tested at least anyway. So, but as always, we've just been tracking through this, and look, once this is finished here, we should have some long trades on our local market in the materials sector. We also need the US dollar index to be at the right place as well. So just drilling in here for a moment though, looking at this through here, we'd be looking at this as the ABC correction through here. So we've got the A wave moving down for the 38.2 retracement level. We've got a 3-wave counter trend here, an ABC correction for the B wave, and we're looking at wave 5 moving to the downside. So we'll be looking at this in terms of down for 1 here, back for 2 here, and also wave 3 coming down, 4 and 5 through here. Wave 3 is not quite complete yet, I don't think, because we've got this move down through to here, which would be the wave 1, then an A and a B and a C for wave 2 here, and I think this is all of the third wave here, so we'll see some consolidation through here's wave 4 on the 72, and then down for 3, back for 4, pulling back to the fourth wave of 1 lesser degree, wherever that comes up to, or 38.2 retracement level of that move down through here. So look, anyway, a complicated series of wave 4s through here before we see a wave 5 to the downside, and then we'll look for the long side after that, expecting new highs to be made above the 380, and once that's there, we'll be looking up closer up to the 400 there, but the long trade will come from the setup on the 372, but that's a few days away just yet. Gold's pretty much the same sort of situation as well. However, just probably a bit more downside on this one to come yet. But in saying that as well, we wouldn't, as you know, we just wouldn't be short unless we had that 72 as resistance there. So the 72 is strong, but when you get 772 together, it's stronger than just a single 72, and the same with 272 as well, as you'll see on the Australian dollar. So it's a very critical point there. But look, what we're looking for here is also a wave 4 as well, in terms of an A wave to here, a B wave up here, and because the B wave has made a new high here above the top of this structure here, then it's you know, I don't know, it's normally a sign of strength. So you know, we may not get it back down here at this A wave again through here. But let's just give it some time through here. If we do have 5 waves in through here, we'd be looking for a wave 2 to come into play, then a wave 3 to the downside through here, and a wave 4 across here, and a wave 5 down. So it could come lower, it may stay higher through there. Let's just see how it pans out, and also keeping an eye on the US dollar as well for that as well. Now the oil market, in its larger pattern through here, just looking at it on a daily chart through here, just bringing back in the picture here, we're looking at a large triangle through here in terms of down for wave A and wave B and wave C, and then wave D through here, and then wave E. But wave E does look a little bit small, I have to say, so we just need to be a bit careful about that situation. A triangle like this here is, in Elliott terms, is a 5-wave structure, 1, 2, 3, 4, and 5. So that's the A, B, C, D, E wave structure through here. But it's kind of fitting in a way, really, because you know, this D wave has pulled back up close to the 61.8%, of course taking in 100, one strongest number in the market, and then the move down through here as wave E, coming into the 50-60% retracement level from this point here, does kind of make it sort of done and dusted there. But in terms of proportion and ratios, it just seems a little bit sort of on the small side in terms of this whole structure here compared to this structure here. It's diminishing a little bit quicker as a triangle does move into the golden mean and the golden ratio. So when you're looking at the Fibonacci numbers 1, 2, 3, 5, 8, 13, 21, so forth, the further that you go out, the closer to the golden mean that you come. But that means that each swing in through here, the A wave here, the B wave, the C wave here, they would be you know, 40%, 38.2 smaller than each swing, so of the next structure. So this one's just a little bit short here, but it does reach the targets as such. So we could have a low in place here already. So just bearing that in mind, and this is the E wave that we'd be looking for down here, in terms of the A wave to here, and A, B, C here for the B, and the C for here. The C wave doesn't count nicely as 5 waves down. It's more like a larger B wave. So there is something that could be a little bit more complicated that we've missed through here. So as I said, when this is sort of arriving into the medium level here, the 90, then, we just need to give it time to unwind through there. And everything's going according to plan because we've got group 1 above the 90. Group 1 is doing its job, the 1, 2, and 3 here, doing its job in holding the price to the closest largest number. And the first minor level here, the 88, is doing its job in holding the price to the closest largest number. So, we're certainly working within the range here, and the price is working itself into here. And we can see that from this high to this low to this one to this one, it is diminishing into the 90 here. And given a little bit of time over the next session or two, it will find itself as support or resistance on that side of the 90. Once it's done that, then it's a game of support and resistance from that point, and that will also give us the direction of the market as well from there. Of course, this is influenced by indices as well, and also the US dollar as well. So we're not expecting any strong moves in the S&P 500. So we just expect this to vibrate across the 90 for just a little while yet. But as you can see, it is diminishing into that number, and it will work with that number, and then it will come out of that number as support or resistance, and we'll pick that up from that point there. All right, let's have a look at currencies. Okay, starting with the US dollar index here, we are in that fourth wave here. So the tricky bit with the fourth waves are always the most complicated structure out of all the corrective patterns, and they can tend to be normally sideways and complicated, either triangles or complicated zigzag flat patterns. So what we've got here so far is that we know that it's corrective because the internal structure for this move up through here is corrective in nature. But what we're not quite sure of if we're going to get a flat correction, which will take us above this high here, or we're going to get a triangle pattern which will keep us under the 80 and then drop down for wave 5 through here. So this is the kind of structure that we're looking for. We're looking for wave 4 here, wave 5 down here as wave 3 here, then back to wave 4 and then wave 5 down. So we're just not sure about what we've actually got within here. If we pull this apart a little, drill in here a little bit closer, what we can do now is we can this structure coming up here for wave 4 is corrective in its, because it's got overlapping wave structures through here. So these highs and lows are overlapping each other, so it is a corrective pattern. So what we're not sure about is that, are we going to get a triangle pattern within this section down here and then a move down, or we're going to get a move to the upside? If we're going to get a move to the upside, then, and the S&P 500 and the euro will be doing the mirror opposite of that as well. So here we had wave 1 or A wave here, wave 2 or the B wave, or wave 3 or the C wave. We can remove the 1 here now, and the 2 here, and the 3 here now. So we do have an A and a B and a C correction here, which makes us either into the triangle pattern or into the flat pattern. If it's going to be the flat pattern, then we would be looking for 5 waves up. So we would have up for 1 here, back for 2 here, then we would have up for 3 here, such coming into here somewhere, and then a wave 4, which would be across the 80 there, and then we'd look for one more move to the upside. So that would give us a C wave. That would basically give us an A wave to here, a B wave to here, and a C wave up to here, and then we would see the move down. And while this is moving up through here, of course, the euro and the S&P 500 would be doing the opposites through here. And yeah, so that's that pattern. Or we'd be looking at a 3-wave pattern into just close to the 80 there, and then another 3-wave pattern basically coming down through here as such, something like that here. Just bring that in there a little bit further, something like that. Then one more move to the upside. I know it's complicated, but that's just the way the cookie crumbles. and then a move down from that pattern down from there, making the wave 5 down there. So, but the main point here, I guess, in a way, is just to realise that in one way or another there is going to be some sort of strength here, as in the US indices there's going to be some sort of weakness there as well, and that's the point to work with. When we're looking at the euro and the other side of the fence here, doing the mirror opposite, you know, we've been tracking through this through the 130 here, and the 130 is the minor level, and it's the top of minor group 1, and it's it's a strong level, and we just understood that there would be a reasonable correction across this level, and once the correction is finished, it will come out as support or resistance, and in this case the bias is quite strongly to the support side. The pattern that we were looking for through here, as there's only basically 2 patterns that can occur at a level, and this is the overshoot, so the distance it goes above is the distance it goes below, so that's what it's done there, and eventually it will just work into this 130 there. So this move that we've got to the upside here, we were looking at that being possibly a positive run to an impulse wave starting to the upside and moving us straight up to wave 5 here, straight up through there, or we would have a more complicated sort of, let's just say, an A and a B and a C across here, or a triangle pattern, or the flat pattern that we just talked about with the US dollar. And if that's the case, then we would see this move down, testing these old lows through here as such, but not going much below them, just enough to take the stop outs and bring the value buys back in. So just sort of drilling into that a little bit further through here. We're looking at this pattern moving down here as a first swing, this moving to the upside here, and we've got a nice little A in here, little A, B and C for the B wave, and then 5 waves up for the C wave, the 1, the 2, the 3, the 4 and the 5. And it does appear that we're actually got 5 waves down through here now, so that really sort of concretes that nicely as an A and a B and a C there for a B wave. And because we've got 5 waves coming into here, we would see some sort of retest back up into the 130 and then a move down from that point there. So just drilling into that more so through here as well on just the 5-minute chart through here. Look. This is from the top here, from the 72 SG2 up here. We've got the down for 1 here, then the A, the B and the C for wave 2. We've got the 3rd wave down, the 4th and the 5th. So if we've got 5 waves down through here, so if we get 5 waves in the opposite direction, that will give us another 5. So we would have another 5 down through here as well, the 1, the 2, the 1, 2, 3, 4, 5, the 3rd there, or maybe even 2 here. Yeah, and the 4th and the 5th here. So there is 5 waves here. So we're looking for a corrective wave to the upside here in terms of 1, 2, 1, 2, 3, 4, 5. So we've got the A wave here. We've got an A and a B and a C wave here. So we should see another little push up through here as well before we see that rollover retest of the 30 there. But if the subgroup 2 area here, after the market reopens, of course, when volume comes into it as such, if the whole subgroup 2 area here becomes the resistance, the retested resistance, then we can look to the short side from there. But do expect a little move to the upside first, and the move to the upside would normally be, there'll be equality within the trends as well, so the distance of this here as an A wave can be tacked on to this one here, so that would give us the retest of that 130 there, if that was going to be the case, and looking for failing at that point there. So just keep that in mind there. But look, once again, the main drift is that the US dollar index, the S&P 500, the euro, they are in complicated wave 4 corrections. You probably actually better off looking at the CAD for a move down. I'm not sure if I've got it here at the moment. Let me just check. Yeah. So with the CAD here, we've got a nice 5-wave structure to the downside here, and then an A and a B, and that could be into the C there. So as soon as that 72 in there becomes the resistance in there, then you can look to have a short trade within that area there. The Australian market, go here. So okay, so what we're doing. Just getting my sort of bearings back after being in Melbourne. We were looking for a 38.2 retracement level coming into the 102.72 area here. That's panned out. And then we were looking for 5 waves down through here, which we're looking for, and that seems to be complete now. So we'd be looking for a move to the upside, coming back into this, retesting this area back up through here. For it to do that, however, it needs to find support on the 102 there. So it's just drilling in there a little bit through here. So just double check all of this here. 4, 5. That must be the 4th and the 5th here. So if the price finds that the 101.72 as resistance there, then expect new lows from that point there. But as far as it goes so far, this is just the overshoot pattern through here. So we can expect this to be the same distance above and below, and it should work into the 102 there. If the 102 becomes support, then you could probably have a long trade based off the 102.10 here. So you'd need that as support and then build the rest of the trade into the 102.20. If the top of group 1 develops support, then what that does, once that gets support, what that does essentially is it separates itself from the 102 here, and then you can look at the midpoint here, and you'd have to work the midpoint here. But the expected resistance would be the 102.72 there. So 272 is, as I mentioned before, is stronger than just the normal 72 there. In the bigger picture for this, though, if I've got it here somewhere, just bear with me here. Yeah. So what we're sort of looking for here is we're looking for this little ABC pattern coming down, and then a little ABC pattern coming back up through here, and then a move lower into here for the E wave of wave 4 there. And once that's completed, then we'll look for a move to the upside from that point there. So it still needs a little bit more development to unwind through here. So the 61.8 retracement level for this here would be down here as such. So yeah, look pretty close to the $1 there. That would be the psychological point there. So we will see the market bounce around here as it bounced around these numbers here. We can expect that to continue into this area over here. So there's no longer term long trade just as such here. That will only come when when you see the newspapers showing how bearish the Australian dollar is, and it's all doom and gloom for the Australian dollar. Well, then that's the point that we'll be taking more interest in it at that point. So no sort of real setup there. In fact, there's no real setups in any of the markets at the moment, because that US dollar index moving sideways in that wave 4, it really reflects back into the indices and the commodities. Not so much into the ASX 200. It seems to be doing its own little thing. Even many of the other Asian markets will be going into bearish mode. So the Australian ASX 200, for a change, is actually in its own little sort of positive move there. And that will partly be for the Australian dollar becoming weaker as well there. So a revaluing of the actual cash market as such. Alrighty, well, that's it. So good morning and good luck.